Hi, everyone. We are so excited to see you today because we're going to talk about different types of loans. If you are the buyer and you're thinking about types of loans that you can apply for, Matt here is going to be able to explain the differences. So I think after watching this video, it's going to be much easier for you to make a decision which loan is the best for you. And if you are new to our channel, my name is Joanna. I'm a local realtor.
And I'm Matthew Mettinger. I'm a lender in the state of Illinois.
Okay, so if you are in need of a realtor or a loan officer to help you and guide you through the real estate process, we are here for you. So Matt, can you tell us, like, I know that there's a lot of questions coming from the buyers, and then probably at the very first meeting, you guys see each other, right? You are able to determine what would be the best option for them, or at least gave them some ideas what they could apply for.
Sure. So there's three main types of loans. So there's, conventional loans, which is what most people do. It's conforming loans, they call them. Then you have FHA loans, which is a government-backed loan, and then VA loans for veterans, which is also a government-backed loan. There's also USDA, but it's not a very common loan because it's kind of done out in rural areas where more farm country type deal. But to start with conventional, so conventional, this is usually the preferred way you'd want to go because I actually just had this question yesterday. Someone called and said, I want to do an FHA loan. And I said, well, why? And they're like, well, I've heard it's better. And I said, well, let's talk about it because there are aspects that are better. But really, for most people, if you can qualify for the conventional loan, that's the route you want to go. So most people for conventional loans, you have to have a 620 minimum credit score versus 580 for FHA, which a lot of people like that, obviously, if you have a lower credit score. FHA is also a little more lenient. So if you have some trouble, credit-wise, or if you had a bankruptcy, the terms are shorter. So a bankruptcy maybe had 2 years ago, you can do an FHA loan, but not a conventional loan. So there are a couple things that are great there. But a lot of people don't know there's something called a mortgage insurance premium that you pay up front, or MIP, and that's usually 1.75% of the loan. And now another reason people say, I want to do FHA, the interest rates look lower, but they're taking into account that mortgage insurance premium that you pay up front that gets added to the loan. And that's why they give you a little bit better, interest rate. So if you can do the conventional loan, you'd like to do that because you don't pay that mortgage insurance premium. And if you don't put 10% down on FHA, the mortgage insurance, the monthly, never goes away. Whereas if you do a conventional loan, 20% down, once you hit that equity amount, the mortgage insurance is going to fall off and you don't have to pay it anymore. And sometimes earlier. I'll tell you, on my personal loans, I always call because you can have them reassess the value. Both of my properties, I had them remove it, even though I put 5% down on the properties. Within 2 years, they had appreciated. Whereas FHA, you can't do that. So you're stuck paying that premium for the rest of the loan unless you put 10% down. Then you're still waiting 10 years. So there's some advantages. Sure.
I'm gonna just interrupt because this is like so
Sure.
important. Because we have a lot of people coming and they're like, okay, but with the FHA loan we can only put 3.5%. You mentioned in the other video, conventional, it's like 0 or 3% or 5%, depending on the scenario. But but what I feel like people are not being really informed about is that upfront PMI. Like
Yeah.
sometimes it's just like, okay, we totally understand that we will have to have that, PMI for the rest of the loan. We may eventually refinance at some point, but so just piggyback on that, what you just said. Can you just go back one more time and explain to people what it truly means to have that PMI up front? Like, what are we talking about? Like, how much money are we talking about? Is there something?
Yeah, so you're taking the loan amount and you're taking 1.75% of that. So as you can see, that's a lot of money. It's pretty significant. Just to make it easy to round up, on a $300,000 loan, that's almost $6,000.
Okay.
And that gets added to your loan amount. And so people don't seem to. It's not common knowledge. I'm sure a lot of realtors don't know that. That's part of it. I didn't know that until I got into lending, and so that definitely makes a big difference because it's getting added to the principal. So yeah, you're getting a little bit of a break on the interest rate, but they're making up for it with that, and so it kind of evens out that balance. So I had someone yesterday give me a call and they said, well, we want to do the FHA because the rates are better. I
Mm-hmm.
explain the
Mm-hmm.
mortgage insurance premium, and they go, "Oh, wait a minute, maybe we don't want to do this."
Yeah.
And so there are a few scenarios where you can get approved for conventional where you may want to do FHA. One of those would be purchase price. So I have someone currently, they can purchase up to about 250,000. If we go the route of FHA, it's a little more lenient on that debt to income ratio. Now they can do up to maybe 290.
Okay.
So there are scenarios where it makes sense because they're just saying, hey, we're okay paying the MIP. We really love this house, but we just can't afford it with a conventional mortgage. So let's go the FHA route, do that. And, as long as there's no major issues with the home, because FHA inspections are a little more, in depth,
Right.
then it's a good option. As long as I like to present it to them and then they get to make the choice, because some people say, hey, I'll pay the MIP. It's worth it to me. So it's really
Yeah.
important just to know the ins and outs of each type, because there are advantages, to each one, but you want to make sure you're getting the cheapest loan. I never want you in a more expensive product.
Right. But then, I mean, there are some people, and you mentioned that already. I just want to circle back to that as well, so people understand that, sometimes you have no other option because there was a bankruptcy or there was a short
Mhm.
sale. So when we thinking about, FHA loans, yes, and some reason is okay, maybe someone just, qualified for maybe, maybe monthly payment is a little bit lower because of that slightly, lower interest rate or whatever it may be, right? But
Mhm.
sometimes it's just a matter of someone just not qualifying for conventional, but you do have options, and we don't want to say blah to FHA, right? Like we want you to understand that yes, this product exists and you can definitely refinance in the future if you get your FICO score higher, or maybe
Mhm.
you are you know your short sale or bankruptcy happened like long time ago, and you finally, I don't know how many years, it's 5 or 3 years, um
Yeah.
and then you maybe that's like coming off of your credit, and then you can refinance for conventional. But those options like exist, and for some people this may be the only option, to purchase. And
Exactly.
it's
Exactly.
great. It's just, you guys have to understand what's the best option for you, because we, like I said, we have so many different clients, right? Everybody has a different story. The only thing we beg you, because we hear this a lot, buyer liar, okay? You guys cannot hide things away from us. That's why people sometimes people are like, oh yeah, really, they have to pull my credit now. Yes, we do, because we need to
Mhm.
make sure that everything that you're saying is visible on your credit. And then sometimes we discover things that, and we talk about it in the other video,
Yeah, last week.
we discover things that you didn't even know that exist on your credit. So that's why
Yeah.
it's so important. But there are some other loans, right? I think I want to hear more about the VA loan as well, because we do work with veterans,
Sure.
and
And
that's
and
exciting.
and for the VA loans, the big, advantage that everyone loves to talk about is 0% down. And I love to always clarify that doesn't mean you're bringing nothing to closing. It's possible sometimes, but it means zero down payment. So you have two portions. You have your down payment, and then you have your closing costs. Closing costs will be your property tax escrow, your title charges, the things that have to happen for the transaction to take place. So those are two separate things. So for VA, you'll have, if you qualify, if you haven't, your benefits not currently being used, which you find from your certificate of eligibility, you can do 0% down, which is great. And then, depending on the market, the home, sometimes you can get a seller credit and you can come to closing with no money, or I've had people even getting money back at closing, which is awesome. You basically get a house and you don't bring any money. But that's not always the case. So I always like to put that out there so people understand, because they hear zero down, but they don't realize closing costs are not part of that down payment. And one other kind of offshoot of that is a lot of people like the FHA because it's 3.5% down, and conventional normally you have to do 5%. That's the normal minimum. But we do have some options as far as programs where you can do 3% down. So depending, on your income, the area you're buying, things like that, you may get an even lower down payment with conventional than you would with FHA. So that's another upside,
Right.
that's like a really good thing for people. And so for VA is similar to FHA as far as qualification wise, because it's much easier to qualify, much more lenient. They want to help out the veterans. They want to give them the best shot possible. So that debt to income ratio is a little more lenient, just like it is with FHA. The credit scores, lenient. A lot of things we can go down. Basically, there is no minimum score for VA, but obviously, it depends on your situation, reserves, things like that. So if you've been in the military, VA is a great option. There's no mortgage insurance, which is awesome. So that monthly money you would be paying, that 0.5% to FHA, you're not going to pay that with VA. So if you are a veteran and you have your benefit, you definitely want to go the route VA in most situations. Again, there's always exceptions. I've had someone who was in the military, but the VA loan wasn't the best option because they were purchasing jumbo. So, there's a lot of different scenarios. That's why we kind of break down
Sit
your
down and
scenario,
talk. Yeah.
look at everything and say, okay, we're going to start at your best option. Does that work? Okay, that option, we can't do that because of credit, because of down payment, because of whatever. Let's move to the next best option. And we kind of work through that. And that's what we're here for,
So
to
I
be
don't know
all
if
expertise.
right. I don't know if I heard that correctly, but did you say that there's no FICO score for veterans on those VA loans?
Yeah, for
There's
VA,
no minimum
technically,
score?
there's technically no minimum. It's really up to automated underwriting, which is a program that we run it through. So I'll tell you, obviously, as your score goes down, it gets tougher to get that approval. But technically, you've got your 620 conventional, your 580 FHA, and then VA is really based on approval from the system.
Right. And then from my
Yeah,
point
so
of view, because I work with veterans as well, we just have to have that special appraisal done and additional inspections on the property, which is totally doable. We do have to have, for example, termite inspection, which, it's recommended, but it's not necessarily with some loans and some properties in Illinois. But when we are working with veterans, that's one of the inspections that we required. And I've seen different variation of it. Sometimes we ask, there is a paragraph on the contract and we ask the seller to do those inspections. Sometimes if they say no to us, we'll have to do it ourselves. But mostly, especially if you're buying a property that is an unincorporated area, they already doing like the inspection of the well and septic. They usually have no problems adding the termite inspection to it. And like Matt explained, with the FHA and VA, we do have like special appraisals. They just look closer at the safety issues. So it's almost like another inspection done with someone that's gonna not only appraise your property, but also look at the safety issues. Nothing too crazy, mostly something about homes that were built before 1978 when it comes to the lead disclosure, stuff like that. But usually we don't see, there are always, if there's a problem, let's put it that way. If there is a problem, we can always work on it. Sometimes the houses are not updated accordingly to the latest codes, let's say. But then when we think about it, if we are buying a property that was built in 60s, 70s, or 80s, those are the codes that were out there then, right? So it really depends who you're working with when it comes to the appraisal and what they are really looking for when it comes to that safety issues. But again, that's like a deeper dive into a buying process. But to start with and to know like where you guys are at and what's the best option for you and which program, because conventional and FHA has also like different programs attached to it, right? So it's not only this is the loan that will be the best for you, and now once you pick the loan, the next step is like looking at different programs that Matt can offer you and looking which program would be best for you. And there are programs for first-time buyers and for return buyers. So it's really interesting. But it's also like, how long is usually your meeting? Like when someone wants to like sit down with you and talk like in details and get the pre-approval, how long does it take for you to like gather the information you need to give them some
it's
answers?
usually 15-20 minutes. It's not too in depth. Kind of what I like to do is we do a general talk where we go through everything. We kind of figure out, hey, are you self-employed? Are you salary? What's your setup? We get everything. Okay, what are your goals? What do you want to purchase? Where do you want to be? We'll find out what your maximum will be, but what are you looking for? Because I don't want to work up your approval to $1 million if you're saying I'm not buying over 500.
Right.
That's my limit. Then we're going to kind of tailor to that and look at what we can do. Then once we have you set up, you do your application, go through, kind of verify everything, look at your numbers, and kind of work through that way. But the initial consultation is usually 15-20 minutes. really straightforward, just getting your information, figuring out what you want to do, what your goals are.
Exactly. So not too scary, not too long. And then once you
No,
know once
no.
and I feel like once you go like under contract on a certain property, like you know exactly what you're buying, what the numbers, right? What how much is going to be the property tax, how much you will have to pay for the insurance on the property, all of that stuff.
Mhm.
Then it gets a little bit more detailed and you can work through all those numbers once you get there.
Yeah.
But yeah, so it's not that scary. It may be complicated when you're
Mhm.
listening to it, but it's like we do it every day, so it's not as
Yeah,
complicated for
yeah.
us. So we invite you again to get in touch with us if you need a realtor or a loan officer. We are here for you. And we hope you enjoyed this video and we see you next time.
Have a great week.
Thanks. Bye.
Bye.